Good morning, everyone, and welcome to the European Crossover webinar. And we have seen the equities going in rebound off of their lows. They're actually pulling back a little bit further here, but decent rebound from the Asian session. Then we have gotten European PMIs, or manufacturing, I should say manufacturing PMIs. Spain came in at 30, Reuters polls for 34. Italian PMI came in at 31, they're expecting 30. French at right on spot at 31.5. And then we just had Germany, and that came in basically on spot here for what they're looking for. And the actual Eurozone PMI came in here at 33.4. We're starting to slide a little bit further here. We're 27.99 here in the SPOOs. They did make it up as high as 28.14. Low in the session. Bear with me. Actually, it did get as low as 27.71. So we had a pretty good rally off of that, almost 40 handles. So a very good rally. Starting to pare back just a bit here, further, I should say. Then coming into the States, we are going to have ISM New York Index. It's going to be at 9:45 Eastern, followed by business conditions at the same time. And then at 10 a.m., we will have durable goods and factory orders. And then news is fairly slight. Wasn't even very much news here. We'll just go and take a quick look here at the indices, and then we'll just move on to the analysis. Had a pretty good pullback. I did share, a couple of charts in the chat room in Asia. We were looking for support at 27.77, and the market, I think it bottomed at 75 3/4 before it rallied back about 10 handles, then rotated back down, then went back up again. Then we came back down to this 27.71 before we saw that rally up here. A similar move in the NASDAQ also. And then you can see the move here in Russell. We'll probably touch on those later. I'd rather just go move into the analysis at this point. Up until coming into these PMIs, the news is just, there was not really any news. It was just on um, Asian equity, Asian currencies. So nothing to touch on there. Then we talked about this is the Italy PMI. Manufacturing activity shrank in April at the steepest rate in more than 22 years, hit by a lockdown. We're seeing equities kind of bounce up further here, 2808 in SPOOs. Latest index was the lowest since the IHS market launched its survey in 1997, plummeting far below the 50 mark that separates growth from contraction. Analysts had expected an even weaker figure with the median forecasts pointed to 30. ISH said sub-indexes for output manufacturing for new orders both also posted lowest readings since the start of the series. And then we just had the data come out for Eurozone. Manufacturing activity in the Eurozone collapsed last month as government imposed lockdowns to stop the spread of the coronavirus, factories to close, and consumers to stay indoors. A survey showed on Monday the coronavirus has infected more than 3.5 million. I need to touch on all the details. Purchasing Managers Index for the Eurozone sank to 33.4. It's lowest since the survey began. Yeah, that's pretty much across the board. An index measuring output, which feeds into the composite PMI due on Wednesday and seen as a good indicator of economic health, sank to a survey low of 18.1. Eurozone Euro area manufacturing output plunged to the extent greatly exceeding any decline previously seen. Well, that's no news either. The slump came despite the European Central Bank easing policy and ramping up its quantitative easing program alongside unprecedented amounts of fiscal stimulus from governments to keep an economy ravaged by the pandemic. With the shops closed, concerns about their health and employment, the lowest in surveys, that's no news either. So there's really there's nothing here. I mean, as far as news, I mean, I can't believe Reuters didn't even put out anything, basically. So we'll just touch on this last story, which is gold, and then we'll just move into analysis. Gold steadies as a strong dollar offsets U.S.-China tensions. Gold prices steadied on Monday as a strong U.S. dollar countered support from rising tensions between the U.S. and China over the coronavirus outbreak. Secretary of State Pompeo said on Sunday there was a significant amount of evidence that the virus emerged from a Chinese laboratory, but did not dispute U.S. intelligence conclusion that it was not man-made. Some sort of fears are that the trade war might be ignited. Such events are good for gold. Gold's risen 18% since last year's Sino-U.S. trade dispute increased. The dollar index moved away from 1-month low on Monday, and the U.S. dollar demand is competing for safe haven luster in Asia this morning, said Stephen Innes. Beyond the rhetoric from Washington, we would expect gold to consolidate until the non-farm payroll figures are out. The decline in the unemployment numbers wouldn't be good for gold prices, Phillips Futures said. So let's just go and move on to the analysis. So the euro closed the week at bias chart resistance of 980. The weekly engulfed the prior 2 weeks' bodies. A rally will find key resistance at 1054 with initial resistance at 1020. Support will be 927. So right now we're at 920. We're actually right at the lows. So 920, we put 927. We'll stay with that. And we said initial resistance would be 1020. Well, this market has been weak from the get-go, and I guess they're looking at it in the sense of the PMIs, and that makes sense. I mean, they were expecting weaker PMIs, the worst on record, which doesn't say a whole lot considering the situation. So resistance, we had it at 1020, but obviously there's nothing to turn this thing around. So right now, resistance would be, we'll put it just above the close, which was just at right there, right around the 980 area. So right on this high there, at least for today, is going to be 992. Obviously, the PMIs, they're expecting weaker PMIs, and that's certainly having its effect. Moving on to the cable. Cable closed Friday with a dark cloud cover. You can see that. Support will be 2410. And actually, this should be 2408. 24 with a potential move over the next few days down to 2330. Resistance will be 2561. So it should be 2408. Same thing. Look how tight this is. Look at this range. I mean, it's just nothing happening in FX here, at least with the majors. Look at this, just pitiful range. Look at that. Really, resistance can be right there at this high. So we're not even moving right now. I mean, look at this. This range is just absolutely pitiful. What is that? 2420, and the high is, well, 50 pips. So it actually looks worse than it is, but resistance can be right up there, 25, 24, 25, 24. And moving on to the Aussie dollar. The Aussie followed through on a sell-off into Friday with a weekly gravestone. The pair has a potential to 63.12, but initial support will be 63.70. The low so far has been 63.72, so not bad. So we've got our initial support for 63.70. With resistance at 64.72. And we mentioned the weekly gravestone doji. You see that right there? Fairly definitive. So we're saying there's a potential move down to 63.12. But initial resistance for today is 63.70. Low so far today has been 63.72. We're seeing the same thing similar in the Kiwi. We'll move into the daily chart. So the Kiwi, after posting a gravestone doji on Thursday, you can see that, closed below weekly level 60.77 right there. Resistance will be 61.09 with support at 60.09. And the low so far has been 60.10, so not bad. Actually, I think it is right there, 60.09. So I guess hit that one pretty good on the nail. 60.09 and 61.09. And let's go move into the dollar CAD. So the dollar CAD established a weekly hammer off the lows as it finished the week into resistance. So let's look at the weekly. You can see that it came right here into this resistance area. Resistance will be 41.41. So far the high has been 41.51. So resistance can be 41.41. With support at 39.97. So the dollar peso came roaring back, but the weekly candle can be construed as a hanging man. We'll take a look at that. See right here. So the dollar peso came roaring back, but the weekly candle can be construed as a hanging man. The next couple of days will be key. Resistance will be 24.95, and the high today has been 24.89. So it's going to be 24.95. With support at 24.22. And as noted here, you look at the weekly, you can consider this potentially, because we're right up here, as a hanging man. So these next couple of days will be key. We're trading at a very tight range. Look at the dollar yen. The dollar yen is marking time at the lower end of its range. Resistance is going to be 778. See right there. With support at 654. So this pair hasn't really changed at all. I mean, nothing's really happened. This market is dead as can be. We did get a little bit of movement last week as equities paired off, but there's really no real movement here. So 778 and support's going to be 654. With that, we'll move into the cash dollar index. So the dollar index has slid into weekly support of 98.69. A rally back will find resistance at 99.49. It looks like that's the high there. Let's see. Yeah, that's the high, 99.49. So as I mentioned, we had slid right here into weekly support. You can see right coming in here. So 99.49 and support comes in at 98.31. We've already come up quite a bit, so putting it all the way down to 98.31 is a little bit overdone here. It's actually going to be this low here, which is going to be 98.79. And that'll cover the majors. And let's just go and move on into the cross rates. So the Kiwi yen pulled back on Friday after posting a gravestone doji on Thursday. Immediate support is 34.35. That probably meant to be 64.35 with a potential move to 63.17. Resistance will be 65.38. So it actually dropped as low as 64.12. We were looking potentially to go right there. Actually, that should have been it right there. 64.25, not 64.35, which that hit the wrong thing, but it'd be 64.25, although it did dip lower than that. And resistance, we were looking for 65.38. If we do get a bit of a turnaround here, and they really knocked it down pretty good. Really came off quite a bit. So we'll keep the 65.38 though. Moving on to the euro yen. So the euro yen posted a tweezer top at 1770. You can see right there. The pair cleared several daily closes. You can see that as we rallied up here. Look how everything we cleared out. Support comes in at 1704. Well, we've even broken below that. We've really come off here because the euro's been so weak because of the PMIs. Obviously, we're going to go. We pressed below here. And at this point, because the PMIs and the euro so weak, because that we would actually. You would have thought, and I was concerned about this because even though we had cleared these levels, you can see, look at all these days that we cleared out with this turnaround. Look here. I mean, look at it. Cleared all this stuff out. But we had established this tweezer top. Thought, okay, they may come in. I was thinking they might hold up a little bit better, but they still went even lower here. So looking here, this bar here, right there, would be 1660, which is where we're at right now. That would find some additional support. I thought that, like I said, we may hold, let me see, 1704 followed by 1677. So we're going to go with the 1677. That was followed by, going to go with what the levels were. 1677. which was actually Friday's support. And resistance is going to be 1774. That certainly doesn't look like it's in danger at this point with these weak PMIs. And we'll go and move into the Euro odd. So the Euro posted a turnaround began on Thursday as the Aussie weakened. The pair has the potential to 72.86. Resistance is going to be 71.92. So far, resistance has been 72, looks like 72.06. We'll stick with the 71.92. With support is 70.17. So 71.92 for resistance. And support is going to be 70.17. Okay, so the Euro QE rallied on Thursday and Friday, attempting to place a temporary bottom. Initial resistance is going to be 82.14. Looks like we rallied up to 82.20. Looks like about 82.20. So 82.14. We are pairing back with these weak Eurozone PMIs. And supported 79.90. And let's go move on to the ASEAN. The ASEAN jumped Friday at the week's lows after posting a small hanging man on Thursday. Support on Monday will be 68.20 with resistance at 69.36. So low 60. So far, the low's been 67.94, 95, 67.95. We had 68.20. We're going to stay with that 68.20. Right now, we're at 68.46. With resistance at 69.36. Take a look at the Guppy. The Guppy paired back on Friday after closing above resistance on Thursday. So we kind of similar like we saw with the Euro Yen. We cleaned out all these levels. Look here. And then all we do is turn around and roll right back down the hill with a dark cloud cover. Support will be 32.95. Well, we've even dipped even below that. Look, we've basically did a turnaround and made it all. Look, we go in and blow out all these closes only to turn around and roll right back down the hill and then complete the complete turnaround down here. So we're just going right now. This is just going to go at the level, and that's the level where it's testing. I wouldn't have thought it would come all the way back, but certainly that's what it did, at least not already today. So that's 32.59 here on this level here. So one of the things we haven't been focusing on is on news, because I think where a lot of people have run into confusion, not confusion, have had some difficulties. They're trying to read too much into the FX. And you can see here, look at this. We run and we and I can kind of give a little bit of benefit for the euro, because in the sense that, okay, I can see the euro giving up its gains. Let me go back. Let's come back here, what I'm referring to. So, I mean, this is a bit of extreme, but look how much it comes all the way back, and then, ends up giving, come back here after we clean out all these levels, these days ranges of, looks like close to about 10 days worth of ranges. But I mean, with these Eurozone PMIs, I mean, certainly we can see it give back. And actually, we haven't even given back 50%, but it's given a decent amount back, okay? But I mean, look at the look at the guppy. Holy smokes. I mean, you take out these levels and it turns around and gives all of it back within 2 days. And that's what I'm saying is, that's why, I mean, when we were doing the analysis before, we would, focus in, okay, this is happening, this economic report. Look, that's why there's not that much, at least for now, until things eventually slow down. I don't have that much focus on what these reports are coming up, because it really doesn't matter. These markets are just moving on the levels. That's all they are. They're moving on the levels and nothing more. So I don't think you have to do that much focus on, oh, this report's coming up and that report's coming up and the BOE's coming up and the blah, blah, blah's coming up. It doesn't really matter to me. It's just everything that these markets are just going on the levels. That's all they're going on. But I mean, look at this. This thing turns around and gives up everything all the way right back. I mean, after it blows, and maybe it's not to the extreme that the euro yen was, but I mean, look at this. You blow out all these ranges. Look at that. And then you turn around and give all of it back within 2 days. It's just like they're just moving on levels. That's all they're moving on. So anyway, so this is going to be support, which is going to be 32. Actually, it's actually 32.57. We put 32.59. And resistance. That's why sometimes the analysis seems like it's going rather fast, because we're just going by the levels. There's no sense to go and focus on, well, you see this report's coming up and this may have this. It's just moving on levels. That's all this thing is moving on. All these FX markets are just moving on levels, nothing more. So I look on here, I try and look to see if I can get some confluence. So the confluence coming in off of this low, and this high right there gives me 33.71. That's going to be the resistance for today. And moving on to the sterling nod. So the sterling nod rallied on Friday to the weekly level of 94.83. What do you know? You see, it's just going to levels. You see, the high for Friday was exactly at that level, that key weekly level of 94.83. We had a strong rally and it stopped right on the nose at 94.83. But the sterling rally rallied on Friday to weekly level of 94.83. The pair is challenging broken support trend line. The pair will need two consecutive closes above 94.83 to establish a bottom. Support is going to be 93.46. So you can see here they poked their heads above 94.83 and they're kind of rolling back here. It's also confluences here with this broken trend line. So support's going to be 93.46. And resistance, we'll just keep it at this level. It's not really, I mean, it's just a major level and they're having a tough time with it anyway. They did poke their head just above it, but we'll just stick with the 90.43. I actually had 94.90, so I guess we'll just stay with that from Friday. Um, and that pretty much does the FX. You can see here you're trying to hold a little bit here after the dip. And the dollar index, once again, we had talked about it going into the weekly level support. We can go and take a look at the equities. We actually have dipped down here, and we're actually trading here. You can see that right here at VWAP. So I'll probably find a little bit of support in here. In Asia, I pointed these two charts out. We rallied up here to this 93.97. We can open that up. 93.97 in Asia, and then we turned around and rotated from there, and then I had support at 27.77, and we actually held there. I think we got to as low as 27.75 and 3/4. We rallied up to 84, which was a 34%. We rallied back down. I think we held it, or we took it out by a handle and a half. We rallied back, and then eventually later on for a third trip, they came down here, and then we've seen a pretty good rally right up here to 28.14. If you look on a 30-minute, I think it hit it right to the nose here. No, we had resistance. Yeah, right here. Let's see. And then we've rotated back. We're just seeing some oversold rallies here in NASDAQ and S&Ps. Haven't had any chance to do any work since Asia, but fairly well oversold at this point. Not all in on a short-term basis. Look at that from 28.14. Looks like we made up to here, almost to 28.15, but right there, pull back. And you see the market trying to hold here. We'll saw a nice little rally back here in Russell. Look at that. We got all the way down to, I was looking for 1223.7, and so saw that nice rally. There we go. Eventually, we even moved lower, I guess. That third trip down. Yeah. Because initially the 1223, I think the low was only 1224.20. And even on the next trip, it wouldn't get down there. Eventually, I guess when the S&Ps broke down to 27.71, we did eventually get down to, it looks like 1220 before seeing a decent rally back up here to 1250. I should be bouncing around here. You can see here on the back on Wednesday, I guess you'd call it Thursday morning, overnight when I was looking for reversals. You can see the Greystone Doji here in the Dow futures. Gold moving up a little bit higher here. Although the thought is that if we do get a high unemployment, that'll be problematic for gold. least that's what they're thinking. We can take a look at the range here as far as a fib. So the 50% comes in at 1720. The thought they were looking at, if we do get high unemployment, which we're expecting, that may weigh on gold. So we might run into some trouble here against the 1720, and then maybe see the market start to weaken. That doesn't necessarily mean it's going to be today, but if we see it up there, we may just hang around for a day or two, and then maybe start to pare back a little bit. Crude oil, not really a whole lot happening there. We have come off those lows, but that's going to be it here right now. SPOOs are just hanging around near VWAP. Right here, and we'll see how we open them up in the US session. But thanks for joining us here in the European crossover webinar, and we'll see you in the chat room.